All right, hey guys, Sam here. It is mid-morning, September 28th. Good time for us to take a look at 4 or 5 of the majors here and see if we can learn anything, if there are any trades setting up. So here, we had been targeting this little zone up here, and interestingly, we got the reaction that you'd expect there. Now, does it tell enough of a story for us to initiate a trade? I would tell you no. Does this mean we're going down to 2,500 or lower? We can't draw that conclusion yet either. What we can see is the market is starting to paint out a roadmap that is consistent with some of our expectations. So where do we find opportunity in the midst of that? So we look here. This is I'm going to take this wave off here just to declutter the chart a little bit. All right, so we know that's a possibility. And what did we do on this little push up? We went right, if you follow me, you know that this is something that you really have to pay attention to. So we went right into that little pocket between the 618 and the 65, right? So people with their stops a little too close, that were shorting, they get wicked out there. They get wicked out, right? It's very common, particularly in crypto. Also, you see it in Forex all the time, and it's just the stop running. Now, does that mean hey, top is in? Well, it's as is often the case, it's hard to tell, right? It's a little bit too soon to make that conclusion. I'm definitely not suggesting a short here, but I'm not sure we're ready for a long either. So let's break it down here. So we had the reaction that we expected, and would we get to for 42.65, and so we were less than $10 off of the 65%. I'm on here. This is on Bitstamp on the 240, the 4-hour. So we're getting the reaction. Now we're coming back down to 41.35. So we're $125 off of the pivot. If we look at the way we were counting it, we have a potential 5-wave in, so that could be our larger B, and now we're going to start. What we'd expect now is potentially we start carving out an impulsive move down. So how would we know? Well, we'd have to see this kind of action. We'd have to see something impulsive or a leading diagonal in this case, to set up the 1-wave. So we're still kind of in the hurry up and wait to see what happens, because we just can't quantify this as a top just yet. Now, one thing that's a point of caution is that we don't make the median line. That so one or two things is going to happen. Either we're going to pull back here, retrace, and take another run up at it and try and wick it. Algos will have that as a target. And it was very precise on the way up. We caught the low here on the median line, and we've missed it here. So this can set up a fierce reaction in the other direction. It's potential there, but too soon for a trade. The only way we could quantify is if we see either an impulsive move down here in a 1-wave or a leading diagonal, and then we wait for the retracement if we're going to be sellers. Right? And that's not always the place that we want to be, is on the short side of Bitcoin, but it's a possibility. And if it's heading down that low, well, we certainly want to be giving it plenty of space to finish whatever correction is underway. So let's take it down to the hourly for an alternate count. And that that's the reality of Elliott. You have to consider alternate counts. So if we look at this, now we had been counting this as we had little 1, 2, 3, 4, and we had an extended fifth. But if we just go to the Elliott oscillator, which again is just a 5 and a 34 moving average displayed as a histogram, where it can be useful to us is we know the third wave is likely to be the strongest wave, right? So we can see that's the case. So on the hourly, we have the possibility here that we've got a 1, 2, 3 is this last swing high that we hit, and we're going to come back down for a 4-wave here. Now I've got a pitchfork on this, and I've done the modified shift, so you can see I've started at 50% of the way of this wave here, which potentially is, could be a 1-wave, could be a C-wave. All I know is it's the largest move we have before we retrace and we start this impulsive move here. So I know it gets a little cluttered here, so let me take this off just so you can see it a little bit better. Right. So here's the median line. Here's the 150%. Here's the 200%. So I shifted over to the modified shift, and we catch this little high here nicely, and it creates the possibility that we pull back into the median line here, which would set up beautifully for a fourth wave here. We get better structure here, and then we go up one more time for the fifth. Now, if that's the case, we, let's look at a typical target. We'd take the wave 1 distance, and let's say we catch the median line here and project. Well, we know we got to be at least 100%, right? Well, we don't have to be, but that's a likely target, is we'd be 100% of the wave 1, which puts us up here at 4403. Well, if we go back to the larger target, or to the larger chart here, 4403. Well, now we've broken clear of this little pocket here, this little resistance pocket, and we're now pushing up towards the 786, but we're getting a lot closer to the median line. So that's kind of, a very real possibility, and I would have really liked to have seen this gotten to the median line a little bit sooner. So the fact that we didn't get there now, creates alternate possibilities. So let's allow for the possibility. And how do we know? Well, we don't. We've got the wave 1 high here. That's going to be critical for us to hold above it if we're moving impulsively. And then we've got just the standard retracement, which I'll put it on here now so it becomes a little more clear. So this little pocket right here at 4070, that looks like a really nice potential buy zone. So if we're looking for a long, that's a reasonable spot if you want to be a buyer in Bitcoin. For whatever reason, right? So, you're bullish bias, you're looking for a reason to be long. There certainly is a valid trade there. You can take that trade, and whether it makes money or not, it's a thoughtful trade. It's got structure. You're at a 50%. You've had some sort of impulsive move here that's already happened. So that's a very reasonable place to take a trade. So if we put a risk reward on it, let me get a long trade here. Let's say it would be nice if we could catch it right on the median line. But if we go to our upside target, which is 100%, and we put our stop under, on this, you'd want to give that one wave a little room, so you'd have to give that room. So you're 3-to-1 there, assuming you just get to the first target. So there's your negative 23, negative 23.6 right here off of this 50 algo target. Happens to be within $1 or $2 of the 100% of the length of the first wave. So this is a really reasonable trade. So you might, ease up on the size here because of the amount of risk that you've got to allow for. Right, to be a thoughtful stop as to, where am I wrong? Well, if we take out the swing high here, then the count is wrong. Then, maybe it was a 1 down here. We had the 3, 4, and then we get the extended fifth. You can clearly see we get a 1, 2, 3, little 4 up into a 5. So we've got an impulsive structure here. So it's either a 3 or a 5. So how do you determine? Well, I come back here to the Elliott oscillator and say, well, that gives me a clue. Right? So odds are, right, and that's all we ever do is play the odds. Odds are that's a 3-wave, right? Or it's the third of an extended fifth. We don't know yet, but there's a nice long setting up right here, and if that blows out, then that just means that if we come over here, right? So what do we hear? 40, 60. So if we're going to blow that out, then we're going to start this kind of reaction, and we're going to start heading lower. And so even though we take a loss on that, all we do at that point is we wait for the retracement, right? And then you got to be willing to take the short side there. Maybe that's a get well. Maybe you're trying to recoup from this, or you're just as comfortable going short as you are going long. Right? So, I do not like to be short in Bitcoin, but I will do it if the trade sets up perfectly. But, of course, like most of us, I have the bias to the long side. So right now, there's the trade. If you want to get long, totally reasonable trade. Totally reasonable. I will probably take that in some smaller size because I like the setup. I like the median line. But I'm not going to go too large there. But very, very reasonable trade. So that's the look at Bitcoin. If you want to be long, there's your trade. Otherwise, we wait and see what kind of what reaction develops here within this potential first wave of what would complete this correction. Let's go to Ethereum. Now, Ethereum, not quite as easy because we didn't get the target, right? So we fell short of it. So it leaves you kind of wondering, as we come back down here to the median line, do we have one more push up to try and get up to that 618? One more push. We'd have to pull this over a little bit, right? So now we're beyond it. We push over here. Well, if there's one more push, for Bitcoin, there's likely one more push for Ethereum to get up and challenge that level, right? And remember, we went off the 50. There's the negative 23. We're hitting some support right here. We're at the median line. You make a decent case there for that to be a trade. Let's break it down on the smaller time frame. Let's go to the hourly. Let me pop that up. Can we? The count is not as pretty, but it's there. It's there. Let's, just for consistency. Oh, I don't have it down there. Let me put the Elliott oscillator on it. Not as good. Not as easy to spot. Not as easy. Right, so that may be possibly a wait and see. If we're going to retrace one more time, I'd draw it like this. I'd just take the swing low. Swing high. Where's the window? Well, we know the 38. Really, you could go that. I'd probably wait for the 50 because it's unclear. It's unclear. Is that a 1, 2? Then we've got a 1, 2, 3. Actually, that plays right there. So you've got a potential here for a 1, 2, and this is 1, 2, 3, 4 of the third wave. So there could very well be one more pull up here. So let's look at it together because I'm kind of doing this on the fly. So if this is our 2, well, that'd be our 3. So you could move this up here since we're at the median line. Much smaller risk. Much smaller risk. So if we're going to target, there's the wave 1 high. So let me try and make this easier to see. So that you can be a buyer in there right now with a really tight stop on that. Really tight stop. So risk reward, what do we look at? If you're a buyer at the 50, tight stop. That's what I like. Tight stop. Low risk. Low risk. Well, you got, almost 10 to 1. 10 to 1 if we get up to that window. Even if you give it a little bit more room, then you're at 6 to 1. Give it a little room for, a little stop running down here. Here's the pivot we don't want to see broken, and we're sitting right at the median line. So you could be a buyer right here, right now. Here's a little support right here, prior resistance, potentially offering some support. It's kind of an ugly 1, 2, 3, 4, but it plays. It plays. 6 to 1. Give that a little risk. Very tradable. The assumption being that we've got one more push up in Bitcoin and Ethereum goes in sympathy with it, right? That's, again, you want to see it hitting those median lines because the reaction can be severe if they can't get there, right? So you can see it a little bit easier here on the 180 as we come into this what may be some potential support right there, outside edge of the outside median line target, either here or to get that median line. Over to Litecoin, same problem, right? We didn't get there, right? So it makes you suspicious as to whether or not the top is in. This is much stronger. We get there in Bitcoin and we turn, but we don't get there in Litecoin or Ethereum. So question marks. Is there a trade? Is there one more push up, right? So, particularly here, since we have that potential in Bitcoin for the 3rd, we're doing the 4, we've got one more push up for the 5. I think that creates the same kind of opportunity here. So if we look, putting the count on it, and just, what's easy to see? What's easy to see, right? There would be the 3. We're putting in the 4. Our target is here. We got to move it over. We got to move it over. Well, I don't want to move that. I want to move that. Now, that's potential, right? Because we'd like to see it get up to that median line. So you've got this kind of upside potential if we're going to blow through this, right? Because remember, this is the 50 of the all the way halfway back. That's the 50, not the 618. I don't even have the 65 on there. Let me put that on so you can see a better upside. So if you're a buyer here, here's, just it's the same thing over and over again, guys, which I guess is what I'm trying to teach you, is if you just do the same thing over and over again, it takes being right 3-4 times out of 10 with good money management, because the times that you're right is going to well compensate you for all those smaller losers, right? So you always want to be cognizant of what you're risking, and you're asking yourself, if I'm wrong here, if I get stopped out, is this going to hurt me? Does this hurt me badly? Is this too much? Is it too much risk for my account size, right? And if it is, either back the size down or don't take the trade. Don't take the trade. If you don't want to, you want to try and trade the market and not your wallet, right? So if you can't afford to allow for the market to prove you wrong, I would tell you to wait for a trade or reduce the size that allows you to stay in for the retracement and take some drawdown if you're gonna take some drawdown, but let the market prove you wrong rather than just some random risk number that you're calculating based on your account size. Either smaller, because you can always add, or skip the trade and wait for something that sets up better with your risk parameters. Right now, I think there's a potential here. So even if we, I'm on a 4-hour here. So if I take from the 2, to the 50. I'm not sure I've got that. Get that 2 tightened. So there's our 1. You got to do this, unfortunately, with TradingView when you change time frames. Okay, there it is. So we know the 4 can be right here in the most likely pocket, right here between the 382 and the 50. That's a potential long right there. Where's the stop? Take out, well, you could put it just below the 65, but really you'd want to give the wave 1 high, right, as a max. So what's our risk reward? I'll split the difference. Let's go with the first target, wave 1. You'd be right there. That's 3 to 1. 3 to 1. Nothing wrong with that. Or, you want to be a little tighter. You want to be just up to the 65. Almost 4 to 1. And if we get the upper targets, right, if we're going to go, like Bitcoin, go towards the median line in the 618, now you're at 6 to 1. Now back this off a little bit. There's our wave 1. If we're right there, 4.5 to 1. Very tradable. Very tradable. Nothing wrong with that. And Litecoin, much lower cost to trade it than Bitcoin, or even Ethereum. You can get a little bit more size there, but again, be conscious of how much risk, if you're going to trade where the market proves you're wrong, how much can you accept there and not let it hurt you too badly, right? Knowing, right? We always know we're going to be wrong more than we're right. So, really your first assumption should be, let's assume I'm wrong. What kind of impacts that going to have to my account? Right? Just the way it's counterintuitive, but that's the way you have to approach it. First assumption is that you're wrong, because if you make that assumption, you'll be right more than you're wrong, because you're going to be wrong more than you're right. I know that's just crazy, but that's welcome to trading. All right, let's keep moving here. This is a little crypto crazy right here. This is Zcash. This is on Poloniex. I've got the 8-hour chart up here against the US dollar tether. This is kind of the blessing and the curse of crypto, right? So this thing has been incredibly technical. It's been beautiful right up to this point. Now we just got craziness. Now, is it a pump? Is it new? I'm scouring, through my sources and places that I would look, and I don't really know what's behind that. But, I look at that and go, okay, well, so clearly something impulsive, and now we're correcting it. So it sets up a pretty well-established range here. We've got these wick highs here, which, we went right up to that body there, that body high. We get this range here, and we had this beautiful double bottom here, right? So there's our range. Let's just cut it in half. There's the 50% right there. and we've come down just a little bit, not quite to the 50. Is that a trade? That's just the kind of thing, if you were in it, good for you. If you want, that's $100 wick. That's nuts, right? On a $300 coin, that's $100 wick. That's that's not really not what you want to see. Because how do you trade that, right? Even if you take it down, let's go down to a 4 hour. Right, look at that reversal, right? So that likely happened, early morning. Here, if you're here in the States, you're asleep for that. So you had a huge winner, and then it all comes back. So that's $100 swing. So is the long here? I wouldn't take that because it's just too erratic. It's too erratic. I would rather see something like this. I'd rather see something that's, without that kind of volatility spike, those long wicks that gives me a little bit more predictability. That just makes me uneasy because I have no idea, where that goes next. Sure, I can draw a 50 on it, and we could take the 50 with a stop here, but I don't like how quickly that happens. So this is, for me. Right, that becomes something to watch because I like the volatility, but I want to see it stabilize a little bit more and create some structure that's a little bit more predictable, But if you caught that ride up and you had a trailing stop or some way to catch that, good for you, right? That's the beautiful part of crypto is you can see that kind of explosive move. But so that one to watch. Definitely one to watch. Even if we go to the 1 hour, we can't even quite get a nice ABC out of that. So to me, that's untradeable, but absolutely of high interest. We watch it. At least that's how I would approach it. The other one here, not how am I doing on time? I had 21 minutes. Okay, I try and keep them under half an hour. This is a bit of a problem child right here. This is Dash. Right? So this is really unusual to see, right? So we had been counting this as a 1, 2, 3, 4, 5. Very unusual to see this kind of complexity, whether it ends up being a triangle, whatever it is, it's indecision. And it's very rare to see that in a second wave. If we have the correct count here, that this 5-wave impulsive structure, because it was impulsive, right? We didn't take out the 1, so it's not a diagonal. We get an impulsive move higher in 5 waves, so that would be the second wave. That's just to me. That's sit, wait, watch. That's very unusual. Much more typical to find in a 4th wave. So, you could make a case that there's a trade down here between I've got the 100% of the ABC, possibly there's the 50. Again, why force a trade there? That just says indecision. So, you might as well roll dice on that as to which way that breaks. The bias would be to the long side, but that's certainly not good structure. Complex, second wave, rare. So I wait on that. Wait and see. Okay, last one where we had some interesting development here. Now here's something I thought might be useful to look at. This is NEO, which also had a huge move in the last 24 hours, a little bit longer. So we had this monster move. So the thing I wanted to point out here, let me break this up a little bit. So if you'll recall, this we were considering this as a failed 5th because of this action. So we're now counting it. We get an impulsive 1. We get a nice clean ABC for a second wave. We hold here, and then we get the impulsive move here. Right, very nice, very nice. Just the kind of trade we like to see. Clean correction in 3 waves. It starts to move higher. This is unexpected, right? That's unexpectedly volatile. But we can carve out that sequence pretty nicely. But so here as we start to correct here, you can see clearly, right? I mean anyone can see that we get a 3-wave correction. So, you might conclude, okay, well, all right, 3 waves done. I know we correct in 3, so, correction's over. We come to the 50, time to be a buyer. Well, I'm not saying that there's not a trade there because you've come back down to this cluster here where we had indecision. Are we going lower? Or are we going higher? Right? But this is the point I wanted to make. And I'm just using the date range tool here. I don't know if you've worked with this before, but the date range, it can be useful. So we can look at what we're calling the second wave here. And this goes from the start at the top of wave 1. The length of this correction here is 135 bars. If we go from the top of 3 to this low here, we're at 19 bars. So one of the things that you'll find in Elliott Wave, and in fact, Elliott talked about it in his book, and Frost and Prechter as well, is that you want to see a bit more symmetry amongst the waves. Now, there's the rule of alteration that we would go simple to complex, but that's not quite what I'm talking about. It's this length of time. So what this creates the possibility is that while we would expect an ABC here, we absolutely have to allow for this possibility that we've got an A, and we're going to go up for a B, and then we go down for the C. Let me put this up here. That would have more structure to it that would be comparable with the length of time here, because in an A wave, just in a typical Elliott correction, we'd expect a 3-3-5, right? 3 in the A, 3 in the B, 5 in the C. That would be just a standard zigzag. So I'm not saying that this couldn't be the low. I'm just saying it would be unusual. So since we're always trying to play the odds and look for the trades that you set up with a pattern that's most consistently repeated, yeah, you could take the long there, but be conscious of the fact that you have a high probability that you're not going to scream to new highs for. Let me get that. Odds are that this doesn't go from a 3 to a 4 and we scream up to a 5. Right? That doesn't mean there's not a long there, but I'd be reasonable about my target. So, even with the 50, you've got the upside here of the negative 23.6. Way up here, it's possible, but I think you're more likely to see some stiff resistance here, maybe at the 618 to the 786, where you likely would see a B wave top out as a failed push to get to new highs. So where's the trade there? That's the one I would look for. Right there. So this is definitely one on the watch list because you've had this very nice impulsive move. But that's a little too short in time compared to this. So my suggestion would be watch it. If you get this and we come down one more time, then you can really take a strong position there because you've got that symmetry and the continuity here of time relationship that makes more sense. So if you're a long trader there, go for it. That's certainly, again, it's a valid trade. It's thoughtful. It has the right structure. But I would tell you to be cautious about it coming up to this level. That's where you'd want to follow with a stop, recognizing that the likelihood is you're going to stall here and perhaps there's one more leg down. You see the same thing. That's NEO against Bitcoin. Last one, and then I'll wrap. Well, you can see the same thing here against the dollar. I blow this up. Right, 19 days, we get this kind of choppy correction. But clearly an ABC, right? We don't quite get to the 50. We don't get to the 50 here. So, likely one more push up. The trade you want is this one. That's the trade that has a higher probability based on this length of time, 153 bars to 19 bars. Right, so just something to keep in mind when you're looking at these. It's tempting, particularly when you're learning this, to get excited. Oh man, I see the three-wave correction. Well, you might have a little pop there that's going to make some money. That can be a profitable trade, but I would not be expecting off to new highs. Not that it doesn't happen. It's just not the probability play. That's the better trade if we get there. Right, wave one high here. Nice impulse. Let's see it. Tee up. Right. Why force a trade when you don't need to? Wait for the ones. Wait for your pitch. Wait for that. Wait for the trade that sets up just perfectly. There's so much to choose from. Why take a trade that doesn't set up exactly the way you like to see it? Why? No reason to. All right, I'm going to wrap it there. We're at 30 minutes, so if I've got some more today, I'll be back with anything I can find to show you. Okay, that's it, guys.